We're going to continue talking about policy here, specifically some tax policy, because the Trump administration is actually looking at changing the way capital gains are taxed. You know, that's a tax on any investment you have. The Treasury Secretary, he says he wants all Americans to be able to account for inflation when they're paying Uncle Sam. So I want to explain this to you for a minute. This is good. This is something we should be looking at. Some of my panelists will disagree, but let's say you bought a stock for $1,000 back in 2008, and today it's worth $10,000. You would owe taxes on your profit, $9,000. But if the government wants to change that, then they'd actually factor in inflation. So assuming that we have some inflation, because, you know, lately it hasn't been great, but assuming we're growing at 2-3% a year and your money is worth a different amount, then you would actually owe less money in taxes. So that's good, right? I mean, wouldn't you want to index for inflation? But, you know, the liberal media, they're out there saying this is nothing but a tax cut for the super rich. Their line, their go-to line that they always go to. Take a look at this. I saw this one last night. I thought, well, not surprised. It's the New York Times. Trump administration mulls a unilateral tax cut for the rich. The Washington Post. Here we go. Trump officials might bypass Congress on tax cut for the wealthy. A U.S. Treasury official telling Fox Business the economic impact is being evaluated and that Secretary Mnuchin would like Congress to take up this issue. So should they? Right before midterms. Joining me right now for analysis, Fox News contributor Doug Schoen, along with American Action Forum President Douglas Holtz-Eakin. All right. You know where I stand. I'm going to go to Doug here
Sure.
to hear the other view, because anytime you tell me an American has an opportunity to keep a little bit more of their own money, and inflation is part of our overall economy, I'm all for it. Doug.
Well, I didn't say I was against capital gains tax, cuts. In fact, Doug Holtz-Eakin will remember that Bill Clinton, who I worked for in 1997, reduced rates substantially. I was part of his political brain trust and signed off on that. But that was after he'd been reelected. To do something like this in the midst of a midterm election and be hit by the Democrats who were running a class-based message will only, in my judgment, help the opposition, and the revenue that this kind of a tax break would provide won't be felt. The political impact, in my judgment, will be deleterious, clear, and obvious.
Well, that's assuming, Doug Schoen, that Americans buy the mainstream media and the left's message that this is somehow a tax cut for the wealthy. But, you know, Douglas Holtz-Eakin, you know, a lot of Americans own stock. A lot of Americans have 401ks. A lot of Americans are, if you're in a labor union, you're invested in equities. You're invested in fixed income. A lot of people, whether they even fully understand it as buying a full-on, you know, share in a company, they are invested in the market. And so I agree with you, and I'd like to see more people invested, for sure. That said, you know, this is about not anything but, I think, fairness. And again, allowing people to keep what they have earned. Douglas Holtz-Eakin, the only way that I think Doug is right, politically speaking, is if the Republicans and the Trump administration fail to explain that to the American people. But, you know, I don't think they're going to have a problem, because when you look at GDP and you look at jobs added and you look at the fact that we're finally starting to see some growth, some meaningful growth in our economy, I think a lot of Americans, they see through the noise and they realize these economic policies are for them. Go ahead.
Well, I think it's absolutely predictable that the Democrats will point toward tax cuts for the rich. The politics of that I'll leave to the experts. Here are the things I actually know.
But they're not for the rich. Can we just get that on the table, right? Douglas Holtz-Eakin, explain to America why this is not just for the wealthy.
So this is a tax on something that is not really income. It's just inflation. And the right way to do business is to adjust for inflation. We do that in lots of other parts of the tax code. We index the brackets for inflation. We index the earned income tax credit for inflation. It is always desirable, where possible, to isolate the real increase in someone's ability to consume and tax that. That's the goal. And this is consistent with that. Good tax policy produces economic growth. That's the bigger goal. That's the heart of what's been the thrust of the administration on regulatory and tax issues from the beginning. So all of that, I think, is pretty straightforward. The issues that arise.
You think it's straightforward, but I think Doug Schoen, his point is it's not that straightforward to people, and people are going to assume this is just going to benefit big-time investors.
That's the politics of it, which are not straightforward. I don't think you can get this through the Congress, which would be a better way to do it. It's not obvious the administration has the authority to do it without Congress. When I was in the White House in 1989-90, this issue arose, and the settled opinion was that the Treasury could not do this unilaterally. I don't know if something has changed since then, perhaps, but that's an issue that arose at least then. And then the last thing to point out, Trish, is if you do this, if you're going to be comprehensive about it, you should also index capital losses. You should index interest and dividends, other returns to capital, and this quickly becomes much more complicated than the buy this stock, hold it for 10 years and sell it example. And that, I think, has always been the sticking point.
Okay. Doug Schoen, so in other words, complicated stuff, it gets reduced to a soundbite, and the soundbite for the left is it's nothing but a tax cut for the wealthy.
Plus, without Congress weighing in a month before an election, when you've got the control of the Congress up for grabs.
What do you think is going to happen in midterms?
I think the Democrats will win the House. Republicans will hold the Senate, if I had to bet today.
The Republicans are going to hold the Senate, but why are the Democrats going to get the House?
Because there are 40 retirements or open seats. You have vulnerability, particularly on the coast, both coasts, and you have upper-income suburbanites who really have their own problems with Donald Trump, notwithstanding the economic benefits, who I think will vote Democratic.
Will a shutdown be a problem for the Republicans?
It is a problem for the Republicans, and if I was advising Donald Trump, I'd tell him to do exactly what you said. Run on the great economic news, run on 4.1% growth, reducing regulation, and stay away from shutdowns, as Mitch McConnell was implying in the segment you played.